afternoon. Whilst we settle down, I thought I'll put a question to the audience. I've lost all respect for you as a collective. It's what we get through democracy. You get bad outcomes. But I've decided that it's the only tool I have got, so I'll ask your opinion once again. So please take up your tool of mass democracy, your phone. Find yourself that QR code. And let's just do a poll question. It has the effect of bringing people in, so that's really what I'm doing here. So let's just test with the audience. My question is, are you guys getting there? All waking up, settling in. It's about, broadly about, don't start the clock. You're stealing time from my panel. Well, no. What would most restore investor confidence in South Africa's mining sector? So the question implied there's not a lot of investor confidence. What would restore investor confidence? Consistent, credible government policy? This is not a joke, this is a serious question. Okay, I mean, it is possible to have consistent, credible government policy. Infrastructure recovery, we talk about the Eskom Transnet reforms and so on. Visible rule of law and reduced corruption, you heard that theme come through. Fiscal incentives and tax reform. Of course, I could have had 6 others, but this is just to start a conversation. 74 people participating. You can see nobody cares for this panel. So we just go and drink. I mean, you've got capital to allocate and nobody wants to hear a thing about your stories. I mean, yeah, finally when everybody, even Valterra makes money, I believe. Huh? that was directed at him, not you. Okay. Okay. Consistent, credible government policy. And the reason why this is the correct, I think, question to ask when we're going to talk to a panel of mostly CFOs is the key investment decisions in a country doesn't get taken in New York and other places. It first and foremost gets taken in South Africa by the current incumbents. The people who make money in South Africa, are you currently prepared to invest in South Africa? And that's really why I put this question specifically to the audience now. So it's not a big surprise in any of that result. Can I hand over to you and your 35 minutes starts now.
Thank you, Bernard. Thank you, everybody, for joining the panel. Welcome to the graveyard shift. I'm sure you're all here to see us and not just the minister, so thank you for joining. Bernard said I mustn't introduce everybody because that takes time away from the panel, but it's always good to do the opposite of what Bernard says. So just quickly to run through, Sayurie Naidoo, CFO of Valterra Platinum, Riaan Koppeschaar, Financial Director for Exxaro, Caroline Donnelly, all the way across from Texas, Managing Partner at Sprott Resources and Streaming, Herman Perry, CFO of Treasury for Harmony, I'm sure he's smiling, and Layton.
The Treasury guy never smiles, look at it.
Exactly.
I mean, even now, today.
Exactly, even at 4,000 he doesn't smile. Layton Nenzinane, CFO of Seriti Green. We're talking about capital allocation and investor confidence today. So I think to Bernard's intro, let's start with the capital allocation because that's really where it all starts and how many companies are prioritizing their capital allocation. So Yuri, maybe start with you. Now that you don't have to answer to Duncan anymore, you're operating in a very different context now with, outside of the Anglo stable. So could you talk a little bit about how capital allocation now works for you and your team? How does it reflect your strategy now as Valterra, and what does that look like in real life?
Sure, thanks, Wilhelm, and good afternoon, everybody. So I think, as Valterra Platinum, as a standalone company with a world-class asset base, we really do have, an opportunity, a great opportunity to unlock long-term value for all our stakeholders in a very disciplined manner. And our strategy is very clear. And our capital allocation decisions really do reflect our strategy. So maybe just touching on some of them. just focusing on operational excellence. And key to that is investing in our assets, right? So investing in the integrity of our assets. So we've got, very well capitalized mining assets as well as processing assets. And you can really see that in the reliability of our processing assets. I mean, and cheekily enough, I think, compared to some of our peers, I think, we do have that stability in our processing assets as a result of that. And then, secondly, I think it's around investing in our portfolio. And for us, we've got about 600 million ounces of resource. And for us, we're very focused on investing in our own portfolio of assets. And Bernard, before you asked me, I think, we're really not interested in pursuing M&A at this point. I think we've got a great asset base, and we're going to continue to invest in that. And we don't see the necessity to diversify out of that. And that's particularly at our Mogalakwena asset, which I think is key to our portfolio. And then the other aspect of our strategy is really investing in market development, which I think is really key for unlocking some of the uses of our metals and demand for our metals. And again, as we've already said, it really is around collaboration and partnerships and how we're going to invest in market development. And then underpinning everything that we do, we've got sustainability as well, and that's integrated in all that we do. So pursuing carbon neutrality, continuing to support our communities, that's all key in terms of some of the decisions that we make. And then, of course, balancing that in terms of investing in our business, we certainly do also look at returning cash to our shareholders. And for us, that's quite key. We've got a base dividend policy in place of 40%. And then, once we've invested in our assets, I think, additional cash, because we are making cash at this point, Bernard, I think any additional cash that we do have, we'll also look at returning that to our shareholders as additional returns.
Helpful. Thank you. Thank you very much. Sure. Riaan, very different business, different kind of almost annuity stream with your Eskom contracts. What does that look like in terms of how you think about your capital allocation? I mean, you've obviously also, you're more in the M&A space at the moment, so that also affects, how much cash do you keep back? Do you want to just talk a little bit about what that looks like for you?
Yeah, so our capital allocation is guided by what we call our sustainable growth and impact strategy. So obviously, as we also discussed this morning, coal is still the bedrock of Exxaro, the core business of Exxaro. So we firstly spent sustaining capital on our coal business. We indicated to the market on an annual basis it's about 3 billion rand. And then after the sustaining capital, our capital allocation framework has been well articulated to the market, then we pay dividends to shareholders. Now, we also mentioned this morning, since listing in 2006, Exxaro has never skipped a dividend. We've paid 46 consecutive dividends. So it's a combination of the SIOC dividend that we receive, and then obviously our coal business, we've got the stability of the Eskom business. So it's not purely export business. The Eskom business gives quite a lot of stability. And then in terms of the capital allocation framework, after dividends, we look at growth. So also I think where we had the advantage, the market didn't always like it, but we flagged well in advance to the market that we will accumulate 12 to 15 billion rand of cash for our growth strategy. So the Manganese transaction has been announced. We're now waiting for the transaction to close, hopefully early in the new year. And then what we also indicated to the market, then we will not retain a cash balance. So we are also now in the process of reviewing our capital allocation framework once we've got certainty on the price tag associated with the Manganese transaction.
Interesting that I picked up in our pre-meeting is you changing your policy as the strategy evolves, right? As you make the big transaction, then you'll probably start changing.
Correct, yes. So we obviously there will be now a new income stream coming into the company. So then it can also present additional gearing capacity. So we're re-looking at the whole capital allocation framework following the Manganese transaction.
Helpful, helpful. Caroline, I'll skip you for now, if that's okay. Herman, I think similar theme with the gold price where it is. I presume also for you in terms of where you put your free cash and how you allocate it is really driven by the current context and how you do it. So do you want to just talk a little bit more about how Harmony does it and what the current environment is doing in that sense?
Sure, thank you. Yes, good afternoon. Now, for us at Harmony, we believe your capital allocation should also be closely linked to your business strategy. We've said a number of years ago that we want to grow the company and we want to diversify both geographically as well as commodity-wise. So we've been allocating capital in a way that gets us to that position, repositioning the business to enable us to achieve operational excellence and reposition the business at a lower point in the cost curve to create a more resilient company. In the current very high gold price, which we are very pleased about, if everybody's been telling me all day long, yes, you need to apply discipline because now everybody wants a slice of the spoils. The M&A, the new business people will want money and capital for M&A. Operations will want money for growth, extending life of mines. Shareholders want dividends. The taxman's going to take a slice. So I think it's maintaining the discipline in the good times.
Absolutely. Layton, you're in the green space now, but you were a mining corporate finance specialist in your previous lives. Do you want to talk a little bit about what you saw back then in terms of kind of capital allocation strategy and what your clients and your targets were doing?
Can't we just first ask Layton, are you old enough to be out on your own?
You know what, Bernard? I was talking to my wife earlier today, and she saw my first grey hair. So I think I've been aged a little bit by finance and
we are
CFO.
celebrating young people rising.
Exactly. But yeah, good afternoon all. I think, at Ceriti specifically, the coal and sort of renewables business are not quite separate from each other. I sit on the Exco for the coal business as well, so we're quite involved cross-functionally in all the capital allocation decision making, and I get to see how much is allocated where and how. And Ceriti has quite a disciplined approach to capital allocation because we're not big and listed, and we don't have lots of listed shareholders to answer to. So sometimes it's easy, but other times it's difficult. So we've had to really follow an approach that looks at how we look at sustaining capex in our portfolio by managing the existing fleet and making sure that it's cash generative through the cycle, especially in days like this when the coal price isn't great enough. You want your assets to be strong and resilient. We've got some good cost plus assets that look like Riaan's assets as well, which help us when the export coal price isn't good, and we have really cost competitive export mines that can generate significant cash flow even during coal price dips. So that capital is allocated through a deliberate and targeted capital allocation framework, which is underpinned by the company strategy. We always believe that capital follows strategy, so you need to get the strategy approved by the board and shareholders and aligned, and making capital allocation decisions becomes easy. So capital always competes in the group, and assets compete as if they're in the open market. So when we look at our portfolio, we rank our best internal growth opportunities, our best organic growth opportunities against each other, and the ones that are most competitive get the capital first, and the others will get reprioritized for another time. On the renewables side, I think that business is growing quite rapidly. I think over the last 18 months, we've raised about 15 billion for it, and we're building 0.5 gigawatt at the moment of renewable energy facilities in Mpumalanga. So we think there's ample grid capacity there, great wind and solar resources, and the returns aren't looking bad either. So as the CFO of the renewables business, I really have to make sure that the renewables assets are as competitive as mining assets, which is incredibly difficult to do. But we believe believe that, building at scale and being able to take advantage of economies of scale gives you a better overall portfolio.
Yeah, it's helpful. Thank you. Thank you. And maybe I'll pick up on that theme, because I think there's the typical business cases for the typical kind of projects that need to return a certain return on capital. Right. But you often get some other considerations that you also need to put capital in. So, for example, renewables or community type projects. And I'll be keen to just understand how the different individuals and companies on the panel deal with that. Maybe Herman, I'll start with you. I mean, Harmony is known for the money you're putting into renewables. And so maybe just talk a little bit about how does renewables fit into your overall kind of capital allocation strategy and what you're doing there. You've got a fairly sizable renewable project that you're running off your own balance sheet. So maybe just talk a little bit about that.
Sure. No, I mean, it's well known that we've done 2 phases of renewable energy. In the first phase, we used the power purchase agreement, which is nice and capital light, and you get, you obviously get a block of benefits from that. But then in the second phase, we decided to use our own capital, and that is really driven by a few factors. But one key one is the project still need to make economic sense, which it does. But it also brings you long-term benefits to that operation, because if you invest the money up front, you get that nearly free electricity for the life of mine, and that actually makes the mine more sustainable, lowers the life of mine cost profile. So we've done that on phase 2, and we're actually studying whether we should do that for phase 3 and 4 at the moment as well. So that's how we see it.
So you reckon you're going to do it on balance sheet going forward?
Yeah, people will say at the current gold price it's obvious, but we will still do the studies, and we will make sure that we achieve a return for investors, but it looks likely.
Sayurie, I'm trying to stir the pot a bit and see if there's some disagreement on the panel. Is that the same view you hold in Valterra in terms of renewables? I know you come from a very different history with Envusa, but how do you see it now as Valterra?
Yeah, so in terms of, we're very much pursuing carbon neutrality on our side, and we've got an IPP at the moment with Envusa Energy, and that's for about 35% of our energy requirements. I think, whether it's on balance sheet or whether we do it through an IPP, each has its merits. So we've also got an embedded, a solar project that we are currently developing in our Zimbabwe Unki mine. So I think, when we met balancing, whether we invest in renewables as any other capital investment decision, it needs to meet our financial hurdle rates. But there's other factors to look at. It's, land access. You need to look at execution risk around some of these projects. So I think it's balancing all of that in terms of what we need to do. So obviously there's going to be a phase 2 for us at Valterra Platinum in terms of our renewables, and we'll look at either option.
Got it. It's a much more balanced perspective. Layton, you will probably argue for PPA because that's the business that you're in, but kind of help us understand just the trade-offs in terms of whether you want to do renewables on your own balance sheet and put some of your own capital, or whether you want to do a PPA. I know we spoke about land and kind of location and what you have available in your own portfolio, but maybe just help us unpack a little bit what are all the decision criteria.
Right. I think companies need to do what's best for them and what's in their sort of strategic priority list. How we'd often look at capital allocation as to whether to do an embedded renewable energy facility or whether to go and build something that's off-grid and integrate it into the national grid is whether you've got the space to do it, right? There's certain areas that, as we well know, the wind blows and others don't. So I wouldn't expect Harmony to be building a wind farm outside of their mine unless they've got a really good wind resource and they want to do that. And I think those risks are different for different companies. So for me, I'd say if you've got the land to build a solar farm on your site and you don't have to pay exorbitant amounts to lease the land and it makes economic sense, then for sure, go ahead. But if you're looking for a PPA, I'm right outside the door. There's tons of wind resource to go around.
Got it. Riaan, the other one that's really tricky is the social investment side, right? So you operate in an environment. You have communities around your mines. You can't always put a return on an ESG community type project, but it's pretty important to make sure that you have stable operations, stable community relationships. Talk a little bit about maybe how Exxaro thinks about that, because there's also capital going into those projects.
Correct. So in terms of our strategy, SGI, the I is for impact. So it's got a couple of facets to it. So ESG is very important. The decarbonization of Exxaro, obviously that has got an impact on your communities, their well-being. So that's also why we invested in Synergy, our renewable energy business, not only to supply energy to third parties, but also for our own decarbonization. And then also obviously the transition minerals will play a role in that bigger journey. But when it comes to communities and employees, we put quite a lot of money into that. The pillars that we look at in Exxaro is we've got a big enterprise and supplier development programs, probably one of the biggest of all the mining companies in South Africa. We've also got a program, what we call mineral succession, where we make our land available to emerging farmers, the land that we don't currently use. So quite a sizable portion of our land is made available. And then also education where we invest, for instance, in early childhood development centers. So I think if you do all of those type of initiatives, you get stability amongst your employees, communities. We don't really have any labor unrest in Exxaro, community unrest, and that bodes well for the company. So also remember the triple BEE scorecard takes into account many of these social projects. I think we probably the only listed big miner in South Africa that is level 2, which basically acknowledges the effort that we put into those initiatives.
Helpful. And I presume then at some point you need to look at the overall portfolio and say, I want to build a school, I want to do some community development, or I want to expand one of my mines. Just what does that trade-off look like? Does the capital go to those first and then the rest gets allocated, or how do you make the trade-off?
Yeah, so I think we've been in the fortunate position the last couple of years. Capital hasn't really been an issue, but I think the sustainability of the business is number one. If you need to put capital into the sustainability of your business, that will always get preference. That ensures stability of the business. It ensures good labor relations and compliance of regulations. So our view is that's the most important before we allocate capital to anything else.
Got it. That makes sense. Caroline, I haven't asked you enough questions yet. You bring a very different perspective, so your accent might sound local, but you're based in Texas at the moment. So maybe let's move on to then investor considerations, because I think it's important to talk about what do the global purse string holders see in South Africa versus other jurisdictions like North America.
Right, and it's a very timely topic as we look across. As you've mentioned, I'm based in the US. As we look across how the current administration under Trump has really changed the narrative around mining, like it's been night and day. You look at how permits are being fast-tracked. This is incredible. There was one uranium company got its permits in 14 days. We're involved with another company where initially it was going to be 2 years. The BLM turned around and said, oh, well, you'll have your record of decision by May next year. And then not too long after that, they said, no, we can get this done by December. So this is shortened from being a 2-year process to pretty much a 4-month process overnight. And the White House administration is telling people in the BLM and other groups, get these permits done. We need mining, we need it promoted, and it's making a massive difference to the US. So, as you think about foreign investors and where they're looking to allocate their capital, we've heard time and time again about regulatory certainty and things moving smoothly, and you can see how that has changed in the US under the new administration. So, as I think about where do foreign investors allocate their capital, right? They're allocating capital to parts of the world where they know really well, the US and Canada, and then the added issue is, gee, we can get our permits really quickly. We know what this looks like, we know what the process looks like, we can go and meet with the White House, meet with the various people in the various departments, and we can get our permits fast-tracked. And unfortunately what that does, as we think of places like South Africa, is it means that people and companies are more likely to invest in the US and Canada where this is happening than they would be perhaps in other jurisdictions.
Helpful. And I think when we spoke previously, you were saying it's almost crowding out any other project being able to be put forward, because there's so many other ones that come across your desk or other investors'
Absolutely.
desks.
No, absolutely. You just have to look at that FAST 41 list that the Bureau of Land Management puts out, and that list is growing every day, but companies are also being moved off the list as they get their permits. It's not as though it's just an ever-lengthening list, They're adding new ones and getting permits out the door. It's staggering, the difference.
Yeah, and that's what we're competing with. Sayurie, now, you spoke about Unki and Zim, but the rest of your operations are predominantly in South Africa. And so maybe just, from your perspective, what is it that you're seeing as the kind of the critical criteria or considerations that our investors are making when they think about a South African investment?
Yeah, I think, for us, clearly our investor base has evolved over the last couple of months. I think we've got about...
Are you saying you got rid of anglers?
So we've got, about 45% of our investor base is South Africa, about 30% in the US, and about 15% in the UK. And, there's obviously different perspectives in terms of investment in South Africa. But, before we even talk about jurisdiction, I think what investors are really looking at and what builds that confidence in investors is the strategic clarity that you've got. Building credibility entails us delivering on your commitments, delivering on what you said you would do. Obviously, they're looking for strong balance sheets and superior returns, of course. And all of that to be done, in an environmentally and socially responsible way. And then, honing in on South Africa specifically, and a lot of our investors, are asking the questions, and, and what weighs heavily on their sentiment is really policy and regulatory certainty. As we've said, clearly, regulatory bottlenecks and governance concerns are top of mind. And then there's the other aspect of energy security at competitive pricing. And then obviously, other services such as your infrastructure, logistics, and water supply. And I think the other area for, and always a question is your constructive engagement with your labor unions, with your communities, as well as government. So I think that's really some of the things that are top of mind of our investors.
Absolutely. Riaan, similar, obviously jurisdiction, but in being in the bulks, slightly different context. Are you seeing similar considerations from your perspective? And maybe also, what are you seeing as moving forward and showing some progress, and where do you think we may be going backwards? Because it's also about the trajectory as opposed to the static picture.
Yeah, so I think our investor base is predominantly in South Africa. If you look at our shareholder register, probably 80% plus is in South Africa. So I think they obviously understand the challenges a lot better. If you look at the offshore investors, I think the history, due to ESG considerations, they couldn't really invest in coal companies. I think that narrative has changed a bit over the last couple of years. Some of the big fund managers are re-looking at fossil companies. But if you now speak to mostly the foreign investors, it's obviously regulatory certainty. So stuff like the new minerals bill, I think, will be top of mind for them. And then being a bulk miner is how can we deal with logistics. So logistics, what solutions can we make to get our product to the ports and to the markets. Luckily, Exxaro, I think for investors, energy is less of an issue. Being a supplier to Eskom, we luckily we get our power.
It's one way to get it.
to get it. So that is obviously a consideration. And then stuff like the situation with crime in the country, corruption, illegal mining. So all of that is top of mind. But I think if you look at investors, they normally, for them, the most important consideration is the risk management in the company, the quality of management to be able to deal with all of these issues.
Yep.
So if they're comfortable that your risk management is able to deal with all of these issues, they get more comfort.
Got it, that makes sense. Herman, I was going to ask you a similar question, because there's obviously lots of talk about what the country needs to do in terms of power or regulatory certainty. What is within the control of the mining company? What can you do as Harmony or any other mining company to create that investor confidence and kind of show that you're worthy of an investment?
Well, I mean, there's obviously a portfolio approach if we look at our investors. Now we've been, our strategy has been to diversify, but we are proudly South African and we are still investing in South Africa. We are, we've bought mines from other companies who no longer wanted them, and we are making the deepest mine in the world deeper. So I think there's a lot of long-term commitment there. Yes, we making 2 large investments in Australia, and the regulatory uncertainty there is useful. Listening to Caroline for 4 months in the US, so maybe we should give that another look. It's even in Australia that takes a lot longer. But I think South Africa does have a lot going for it. Yes, certain things just take too long and doesn't enable growth. But we've learned to operate here, so we are comfortable operating there. But there is a lot of room to improve.
Got it. Caroline, coming back to you and the decarbonization question, I know in previous regimes it was a big topic, right? You had to show your decarbonization plan and you had to make your commitments, and you could only attract investment if you had those things in place. What are you seeing now with our friends in the US? Is that still the case, or has it changed?
There's been a change in that as well, as I'm sure you've all seen in the press. I think for mining companies, ESG is still important, right? You have to do the right thing environmentally, socially, governance-wise. You cannot run a business without doing the right thing, because you're going to land up with your permits pulled or, some issue with your community. So ESG hasn't gone away. I think the big focus of ESG being almost promoted above everything else, that has moved aside. And it's back to, companies need to make money. We need to see a commercial outfit. We want to see the companies do all these things, but not have that as the first slide on the presentation. As far as decarbonization goes, there's also been sort of a move away from that, and that's all wrapped up in, the move, I don't want to say away from ESG, but the move away from promoting ESG as its own living animal. Companies are still putting in solar farms, looking to renewable energy, but they do it where there's a commercial rationale for it, not for the sake of merely decarb, not for the sake of meeting their greenhouse gas emissions. They do it because, as you mentioned, they've got land, they maybe don't have the most stable power grid where they're operating, and so they'll put in a solar farm or a wind farm or whatever it might be. And, and we see that across multiple businesses. We see it in businesses where they've moved to battery electric vehicles underground because, you've got great advances in technology, you can use less ventilation underground, and, it's just generally better for everyone to use battery electric vehicles. So we're seeing those types of moves, but they're very much commercially based rather than a top-down, everybody must decarb, everybody must reduce greenhouse gas emissions perspective.
Spot on. That's helpful. Thank you. I'm going to try and land this plane on time. So I wonder if I can start, Layton, there on your side, just for some final remarks. I mean, Ceriti is also obviously playing a very interesting role in energy security in the country with both your coal and your green assets. So maybe a couple of words in closing from your side, and then we'll move across.
Yeah, I think, the message I want to leave today is that we're pro-South Africa. We really want to see the country grow again. We think there's huge potential in exploiting resources. A lot of the things that we need to do are about collaborating through and through with government, with each other, and there's huge potential for the country to get back to where it needs to get to. So the first thing we need to fix is energy and power supply, because without that, industry can't move. So it's amazing to see the turnaround at Eskom. It's amazing to see more energy come onto the grid. It's amazing to see the reforms in infrastructure. So we're really supportive, and we want to play our role and facilitate as best as we can.
Thank you, Herman.
Yeah, I think we really as South Africans have the potential to turn our country around. 99% of South Africans are good-willing people who want the economy to flourish, and one should also look at the positive side, look for some green shoots. When I drive in the mornings to Randfontein, there's a PRASA train now running every day, commuting people, which I haven't seen in many years. Yeah. So we've heard from Michelle earlier, and I think we must all focus and make our country better.
Lovely. Caroline, a South African living in the US, final thoughts for us?
Well, interestingly enough, my friends last night said to me, have you noticed Johannesburg declining? And I've been out of the country for 14 years, and I said, well, actually not. There are some areas that I drove through on the way back from the airport where I thought, wouldn't necessarily want to get out the car here. But I didn't look around.
Say that for Texas as well.
Exactly. No, exactly. But I didn't look around and think, gee, Joburg is falling apart. I looked around and thought, well, it actually looks pretty similar to when we left. So, to me, obviously I grew up here, and South Africa is always close to my heart. But I don't view it as desperate as perhaps some of the noises we've heard over the last couple of days. And I think if you take a step back, it's still an incredible country with amazing people, mining endowment, which is just second to none. And I think there's lots that can be done to bring mining into South Africa, improve the lot of everybody in the country. And so for me, I think South Africans should mine whatever you have and, use it to benefit the country, because it's a great country.
Spot on. Riaan, proudly South African, personally and in your company. Final thoughts?
Yes, all the capital we allocate in Exxaro at the moment is in South Africa. I mean, we're even confident to get involved in the Northern Cape in Manganese. So it must show you that we're confident in South Africa. But yeah, capital allocation at the end of the day is balancing shorter-term returns with the longer-term sustainability of the business.
Spot on. Sayurie, for Valterra?
Yeah, I mean, it's what we've all been speaking about over the last 2 days. It's really incumbent upon all of us to re-establish, South Africa as an attractive mining investment destination. And I think that's, the role of both industry as well as government. And at Valterra, we're certainly playing our part in that. I think for us, it's very key for us to continue to invest in our assets and then to create that long-term value for all our stakeholders.
Awesome. Thank you.
Look at that. Time's up.
Safi couldn't have done it better.
You're good. You're better than Colin. Colin was like 30.
It's not hard,
I've got lots of questions. I'm not going to get to all the questions. I'll try and pick one for each of the panelists, the difficult ones, obviously. Otherwise, I wouldn't be me. So this is for Exxaro. So anybody wants to answer on behalf of Exxaro? What does listen to the question and then you volunteer. What does the Exxaro CFOs say about the return on investment regarding investing in manganese? How long will it take to get your investment back? 20 years? Question mark. So it was obviously a very bad investment according to the person. What do you say?
No, look, if we if we expect that we'll only repay the investment over 20 years, we would never have made it. So obviously we've got a much different view on the investment than some of the other people. And, but definitely we're confident taking into account our skills. The endowment, 80% of manganese globally is sitting in South Africa. We're a good bulk miner that we can make a huge difference.
It sounds like you two sing of the same hymn sheet, Ben. I mean, you guys are prepared.
Well briefed.
You know, I asked the same question differently, and look, I get the same answer. The next question anybody can answer on behalf of Harmony. What is Harmony's dividend policy, and why haven't shareholders received a significant payout despite solid results?
I should call
I'm
my,
not sure. Oh, yeah, it was from a guy called Bernard. Swanepoel. It doesn't matter who the question asks, it's a legitimate question. Where the hell are our dividends?
Yes, so
Yes.
firstly, we have been paying increasing dividends.
Sorry?
We have been paying increasing dividends, and we have a policy that we stuck to. As I said, our strategy is also to diversify and grow the company, and we've made significant investments. So in time, I'm sure if the investments dry up, there will be lots of space to revisit policies and do all the things that are very popular now with gold mining companies, which is base dividends, extra dividends, share buybacks. So there's definitely room for that one day, but that is something the decision that the company will make at the right time.
Caroline, there are really quite a few questions for you, but I want to perhaps combine two into a question, if I can find it again. Streaming and royalties are becoming more prominent. What does this tell us about investors' appetite for traditional equity versus alternative structures? And the follow-on question is, do you see any such opportunities for spot strategy in South African assets? Can you talk a little bit about your space and opportunities in South Africa for you?
So up until 6 weeks ago, when the market started running, it was extremely difficult for junior miners to raise any equity. Like, extremely difficult. You just have to look at the 2,000 odd listed juniors on the Toronto Stock Exchange, on the venture. You know, for them to raise any money was very difficult. So that opened up a gap for streaming and royalty type transactions, because in that case, it's essentially an equity replacement, right? So don't think of it as senior debt, think of it more as an equity replacement. And as we look around at some of the big deals that have been done recently, when you sort of dig through them, they are more an equity type transaction. I think we'll see less of those now that the markets have started running, and now that the juniors are back in capital raising mode. I mean, you just have to look at the list of juniors which are raising equity, you know, to see the change over the last 2 months. You know, as far as spot strategy in South Africa, we have done some business here. We tend to do things that are a little bit under the radar. We don't make a big song and dance about it, but we have done some business in South Africa, and you know, at this point in time, we are comfortable doing business in South Africa for the right projects. But you know, I think you could essentially say we look at it project-based first and foremost, and if we can tick all the boxes of, is it something we can execute? Are the grades good? Is this going to make money? Have they got power, water, etc.? All the usual things we would look at when assessing a project. You know, then we come down to the question of country risk.
So I've got time to be rude to one more person. I'm sitting here, Layton, you and I go way back. I can't do that to you. You already don't like me, so I'm going to have to do it to you. No, I know what your CEO says, but I want to ask you. Now, the two of them look at each other. As a South African, looking at Valterra being purely South African now, in terms of its focus extensively, are we going to see more of your free cash flow flowing into the South African operations assets? Is this a fantastic thing for South Africa that Valterra is spending the money where they make the money.
Yeah, certainly. I mean, we've got, as I said, we've got great assets in our own portfolio, and we've already, we've clearly articulated our plans in terms of Mogalakwena and the underground project, and that's where we will be allocating a lot of, our capital, and we've already started doing that. So certainly, that's where our money is being focused and allocated.
I don't know why we have this panel. They just come and say what their CEO said anyway. So, I mean, what a waste of an afternoon, except for Caroline, obviously. Listen, ladies, gentlemen, thank you very much. Panel, thank you very much. We have capital to allocate. What a fantastic meeting. Thank you.